Hey everyone, welcome back to Corporate Decoder, where we peel back the layers of corporate speak to reveal the real story behind financial filings. Today we're diving into Alussa Energy Acquisition Corp, the SOO. Get ready because this report is all about the beginning of a big business journey. Before we dive in, if you enjoy getting unfiltered insights from these reports, do us a favor and hit that subscribe button. And if you want to connect with a community that loves dissecting these filings, join our Discord server, linked in the description below. Alright, let's get straight to it. This document is an 8K filing which signals that something important has happened with Alussa Energy Acquisition Corp. The call, or as well call them Alussa Thick. Think of this as an announcement of a major event. So what is the big news? Well, Alussa II is basically announcing the official start of their business through what's called an initial public offering, or IPO. This is the first time the company is selling its shares to the public, allowing anyone to buy a piece of the company. It means they have now officially become a public company listed on an exchange for trading. And where are they trading? You'll find their units Class A ordinary shares and their redeemable warrants all listed on the prestigious New York Stock Exchange. Ticker symbols ALABU for the units, ALAB for the shares, and ALABWS for the warrants. That is a big deal for a new company. Let's break down what exactly investors are buying. The units are a package deal, each one containing one Class A ordinary share and 1/3 of a redeemable warrant. The Class A ordinary shares are like the regular stock in a company, but Alussa 2 has a par value of just $0.001 per S-hair. The redeemable warrants are essentially options. They give the holder the right, not the obligation, to buy a Class A ordinary share at a set price of $11.50. So basically they've structured their offering to attract investors with different preferences. To make all of this happen officially, Alussa II entered into a bunch of agreements on the 12th of November 2025. The most significant one for the public offering is the underwriting agreement with Santander US Capital Markets LLC. This agreement is the handshake that sets the terms for how the underwriters will help sell these shares to the public and ensure the IPO goes smoothly. They also formalized their warrants with a warrant agreement. This document outlines all the rules and details about these warrants with Continental Stock Transfer and Trust Company acting as the warrant agent. It's important because it defines when and how these warrants can be exercised and what happens in different scenarios. Then Teresa letter agreement involving the company Alussa Energy Sponsor II, LLC, which is essentially the sponsor of this whole venture, and other parties. Sponsors are usually the ones who put the initial idea and capital together for these kinds of acquisition companies. Another key agreement is the Investment Management Trust Agreement. This means the money raised from the IPO will be held in a trust account managed by Continental Stock Transfer and Trust Company, again as the trustee. This is common practice for these types of companies to ensure the funds are used appropriately for their intended purpose, which is usually to acquire another business. They also signed a registration rights agreement. This is important for the initial investors, the sponsor, and others who may have already held shares. It basically gives them the right to have their shares registered for resale to the public after a certain period or under specific conditions. An administrative services agreement is also in place between Alussa II and its sponsor. This likely covers the day-to-day management and operational support provided by the sponsor to the newly formed company. And Teresa private placement warrants purchase agreement also between the company and the sponsor. This suggests the sponsor likely purchased warrants privately before or during the IPO, which are separate from the ones offered to the public. Finally, the filing lists several indemnity agreements. These are essentially agreements where the company agrees to protect certain individuals, like W. Richard Anderson, Olslauer, Benjamin W. Atkins, Daniel, Barcelo, Chichao, Maurice, Dijals, Philippe, Lanier, Peter, Martry, Jesse Pelton, and John Wu from potential financial losses or liabilities they might incur while serving the company. This is a standard way to protect the executives and directors. Now, this next part is about the company's internal rules. On the 7th of November 2025, Alussa II updated its Memorandum and Articles of Association. This is like changing the company's constitution to align with its new status as a public entity and to fit the structure of the IPO. And to top it all off, on the 12th of November 2025, the company released a press release announcing the pricing of this IPO. This is how they officially let the market know the price at which shares will be offered to the public. So what does this all mean for Alussa Energy Acquisition Corp. II? This filing is essentially the birth certificate of a publicly traded company. It marks the transition from a private entity to one that is now accountable to public shareholders. They've gone public to raise capital, which is typically done with the intention of merging with or acquiring another company. These types of companies, often called special purpose acquisition companies or SPACs, are structured to find and buy an existing business, taking it public in the process. The key takeaway here is that Alussa II has now completed its IPO phase and is officially ready to start looking for its target to acquire. Now, looking at this filing from a broader perspective, Alussa II, if you will, They have the cash raised from this IPO sitting in a trust account. They have a set amount of time, usually around 2 years, to find a suitable company to merge with or acquire. If they don't find a deal within that time frame, they typically have to return the money to their investors. So the real story for Alussa II is not in these initial agreements, but in what they do next, where they decide to deploy this capital and who they decide to partner with. The success of Alussa II will depend entirely on the quality of the acquisition they make and how well that acquired business performs within the public markets. So that's our initial decode of this Alussa Energy Acquisition Corp. Thirka Form 8. What are your thoughts on SPACs and this particular company's launch? Do you see potential in their strategy? Let me know your take in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more dives into the financial world. And don't forget to join the conversation on our Discord. Thanks for watching and see you in the next one.